living. Crypto is on the rise, making that dough in the crypto paradise. Watching it go, buying low, selling high. Riding the wave, I'm here to stay, living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks, no fees.
Alrighty, let's kick this thing off, surfers. Good morning from paradise. My name is Crypto Amaru, joined as always by Nick, the Crypto Hitman. We got a great slate of stories for you guys as always. The one that jumped out at me as I was scrolling through the feed, Tom Lee out here talking about $180,000 Bitcoin by the end of January. I mean, I guess he's living in a parallel universe. Maybe he's in the Matrix. I want to be in his universe. Because that ain't happening, folks. But we'll talk about that prediction. Maybe he meant January 2027. Who knows? But we got some other good stories for you guys. UBS is getting into the crypto game. They are going to be launching, it looks like, an exchange for institutional clients. I believe they have $6.9 trillion under management. Big Wall Street bank, UBS. Got some other good ones today. I saw, looks like interest in Bitcoin and crypto is at a 5-year low. And I suppose you can't be surprised with the way the price action's been going, etc. But is this good? Is this bad? And maybe we'll take a look at the charts to kick things off. But how you doing today, Nick?
Doing pretty good. Yeah, I mean, I guess we'll just start with Thomas Lee. 180,000 in the next 7 days. That seems pretty crazy to me. It doesn't really make sense. But I did run the numbers. If Bitcoin would have continued to track NASDAQ like it has historically, Bitcoin would be at somewhere between 155 to 158 right now. That's what Bitcoin should be at. And we talk about the undervaluation of Bitcoin. We talk about the undervaluation of Ethereum. But even if it just would have tracked NASDAQ like it did historically, it should be 158,000 per Bitcoin, which would lead you to believe that Ethereum would be well above 5,000, considering Ethereum's been outperforming Bitcoin by about 80% off the lows.
Something broke on October 10th. We also have a lot of people selling because they think 4-year cycle is a thing. We got the big whales that have been selling out as well. And all the attention is on gold. You know, a lot of capital has flown in, moved into gold. And so, yeah, that's not the world we're living in. We're not living in the world of $150,000 Bitcoin. We're not living in the world of $180,000 Bitcoin. But if our theory is right, and Bitcoin's price performance is determined mostly by the business cycle, well, then I guess it's no really surprise that Bitcoin hasn't taken off and reached par with, gold or NASDAQ, etc. We just haven't seen the economic expansion and the liquidity needed for that to happen. So, you're probably bored of me saying the word patience. If anyone's still watching the show, that is. Because I guess interest is at an all-time low. We probably have one viewer left. But hey, it's all good.
Guess who's back again? We got Devakin in here already saying, hey, guess who's back? I got Martin Max King in here. Hello. Our live shows on Twitter actually haven't been bad. I mean, getting 17,000 or 1,700, 2,000 views normally. The one we had like 30,000 views on. So, I mean, although prices really suck, Twitter views are doing pretty good. YouTube views are what they are, in the 20, 30, 50 range. Nothing crazy. And Facebook is Facebook. So, I mean, yes, interest is down, but we're still out here doing our thing. I saw the spaces. Last Thursday was like 200-something people watched it. Yesterday, 100-something people watched it. So, we're still chugging along, still trying to give you the information, still trying to keep the news in headlines in your mind. And then when a time comes for alpha, for opportunities, we'll do that. Talking about alpha and opportunities, the global poll is gold or Ethereum to 5,000 first, and gold is trying to close the door. $4,946. You wonder why Bitcoin is going down. You wonder why Ethereum has weakness. Well, because gold is trying to get to that 5,000 mark. Again, historically, the past couple months, the past couple years, doesn't matter your time frame. When gold is surging, Bitcoin is down. When gold tops out, consolidates or jumps, Bitcoin goes up. It happened 3 months ago. It happened a year and a half ago. It happened 5 years ago. It's just what's happening. So with gold and silver surging here, it is no surprise that Ethereum and Bitcoin continue to sit on the all-important uptrend line. Bitcoin around 88,000, 89,000. Ethereum at 25. What is Ethereum at? 2,800 or something like that? Where's ETH here? 2,900. Not a surprise when I open up the gold chart and it's up to $4,947. Will it hit 5,000? Or will it get rejected before that major, massive overhead resistance, Crypto Amaru, and allow Ethereum to get a chance to play major catch-up like the tortoise and the hare when we grew up?
I think it hits 5,000. It seems like a nice round number for it to hit and then maybe dump and consolidate after that. We'll see. But I think the frustration in the market comes from this sort of misunderstanding of things. The assumption among many market participants seems to be, well, if gold is pumping presently, that means Bitcoin should also be pumping presently. But that's not really how the markets work, is it? The markets work on rotations. Not all assets pump at once. Usually, there's one or two that are having their moment in the sun, as I like to say. Attention, capital is running towards that asset as it's pumping. Eventually, the early buyers of that asset start to take profits. Price corrects. The new people, the tourists, maybe they dump and sell out because, hey, I can't get rich quick. And then that asset's moment in the sun recedes and a new one takes its place. It's called a rotation, guys. This is how the financial markets work writ large. And so it is no surprise that Bitcoin is not pumping at the same time as gold.
And then we got silver at $99.57. We talked about getting up to $100 here. It's gone from 94 to 100 or to 99 since we talked about that. Let's see if that overhead resistance at 100 serves as major resistance for a major top, or if it wants to break through that and continue higher. Silver has been on a massive run here over the past 6 months, and that run continues today, up another $3 per ounce. Pretty crazy to think, if you look at, I saw a post and it was like $3.15 worth of old coins, 1965 or early, is now worth like $258. And if that doesn't teach you one thing, it shows you what inflation has done, what going off the gold standard and the silver standard has done to the US dollar. And the US dollar is still one of the strongest fiat currencies in the world. So overall, it shows you that fiat is continuing to go down and to the right, pricing itself, printing itself into oblivion, and you need to get into hard assets. Right now, gold and silver having their moment in the sun, but Bitcoin and ETH will have theirs soon as well.
You have to ask yourself, what is going to sort of put a pause on this gold parabolic move? A lot of it, I think, has to do with the uncertainty that's created by the Trump administration, some of the crazy wonky tweets and things that he says. So maybe he's got to pare back a little bit, maybe take a week off from saying you're going to invade this, that, the other country. Let's just take like a week or two off. And then people are going to say, oh, wait, actually the stock market's better. Oh, wait, actually Bitcoin's highly undervalued. Like, we're not so scared anymore, and therefore we can move into some riskier assets. I don't know, just a theory of mine. Who knows if that's really what's going on here. But I don't think there's a surprise that you see what's going on globally, macroeconomics, geopolitically, and at the same time, the safe haven assets are the ones doing the best.
Yeah, and you look at the silver chart. This is the 5-year chart. This is what we were talking about, where you're just floating around $20, $30, sometimes even $40 before the massive move higher. And this is why I would not be chasing this move. I mean, if you saw this on a crypto chart, what are you doing? You're probably taking some profits. You're not going to buy, or you're looking for a dip to buy into. You're not going to buy here. So, and this is just 5 years. I started buying silver in 2016 and 2017 before I even really got heavy into crypto, because I started learning about Bitcoin, mined with the gaming rig, but was, buying silver, was buying gold. Primarily silver, because it was undervalued in comparison to gold, and you were in the same price zone, $20 to $30. So from 2016 all the way until 2024, this thing did literally nothing, and people didn't give up. They kept DCing, they kept stacking. We saw a bump in 2025. They made about 50% gainer, and then boom, so far at the end of 2025 and 2026, they finally got their 4 or 5x out of silver they've been waiting for a decade. This coin here, I forgot I even have it on this computer stand. This is a 1 ounce 999 silver. Probably bought this thing in 2016. Just been sitting on my computer stand ever since. And I bought it for probably $20, and now it's $100. Do you think I should sell it or what?
I mean, well, it's $100. So what are you gonna do? Like
Exactly.
go out to half of a steak dinner? I mean, what's $100 these days? If you had a whole stack of them, if you had 100 of those things, I'd say sure. But yeah, you got one. That's pretty cool, man. Look, again, happy for silver people. I'm seeing this prediction here on the side of the page. Silver could top out between 135 and 309, according to Bank of America. Now, these analysts don't know what the hell they're talking about. Just no one knows what the hell they're talking.
I mean, what a
about.
spread!
All this stuff is random as fuck.
If we were giving trading advice, nothing is ever financial advice, by the way. But in the private group, in the surf dial, whatever, if we were giving a trade and we're like, well, all right, we're long Ethereum from the lows, guys. We're up 8% right now. Let's sell our Ethereum between now and $10,000. How does that help anybody? And then you can just say you're right no matter what. I mean, that spread is enormous. Do the math on that spread. That's like a 200% spread on a prediction. That's only 35% higher than the current price. Somebody's getting paid 6 figures to come up with that data. That's a joke. That's pathetic. That doesn't help anybody. I mean, it's a cool headline, I guess. But if you're actually trading the information, trading the news, that helps you at all. Not at all. All right, I'll buy here, and I'll either sell for 35% gains or I'll sell for 335% gains. Makes sense. I hate those predictions.
Well, to be fair, right now, gold and silver feel like momentum trades maybe more than anything else. Like they're going up because they're going up, if that makes sense. People are FOMOing in. But eventually that does stop. The music ends at some point. There'll be a correction. There will be a rotation. So for anyone who's down in the dumps, Bitcoin, it's done nothing, this, that, just be patient, guys. There will be eventual rotation here.
I hope we don't have to be as patient as the gold bugs and the silver bugs had to be, because, man, 7 years of nothing, and then boom. I think that's just a proxy for, you have to have some patience, you have to have some conviction, because these guys could have sold out a long time. Every year for 10 years, they could have sold out for virtually the same price they bought it for, and then all of a sudden, 6 months, 4x, 5x your bags.
I'm sure many did sell out. They're probably kicking themselves, and the ones who held on are happy. That's kind of that's the story of the financial markets. I don't know many people in my own life, anecdotally, who were in a trade, in an investment, sold, and are happy they sold. I'm trying to think. I know a lot of stories of guys who are very pissed off that they sold their blue chip. I got friends who were buying NVIDIA, back in 2016, 2017. And they sold a couple of years after that. I mean, they could have had 100, 200, 500 grand if they just held on. I mean, how many Bitcoin guys could say the same thing? Ethereum guys. Obviously, not all assets are created equal. Some are meant to be sold quicker. Not everything's a blue chip. But when you're talking about gold, silver, Bitcoin, ETH, major tech stocks, I mean, just hang on. You're not going to regret it.
Mainstream interest in Bitcoin is near its lowest level in 5 years. A good time to buy, ? I mean, we think it is, but also this would be going off the thesis that the 4-year cycle is dead and we're on a 5-year cycle and the low is already in. The bear market is over for this portion of the market move. It would be interesting if you could zoom in on this and see when the other lows were. I mean, the other low was here probably in 2024. That was after the Pepe meme season, and we went back down, getting crushed out of the market. I would like to go back in time and see, when has this happened? The doldrum of the bears, near the tops, what's going on there? And it kind of looks like it gets down there and sits down there during this bear market, every year. And then we get a little spurt of meme season. I think this was Pepe, this was Mong. You got the Binance season right here, and then it comes right back down. This was Aster, Hyperliquid, etc. It's pretty interesting just to see how little people are interested in Bitcoin right now. Even though you have the most powerful country in the world continuing to talk about it, you have big players buying it up, but just retail interest, overall interest is non-existent because of red candles. You have green candles in stocks, you got green candles in precious metals, you got green candles in Pokemon. Why should anybody care about Bitcoin?
I'm in it for the tech, bro. I'm in it for the tech, but no, this is how it is. When the price is down, interest is down. Price is up, interest is up. This chart really isn't that complicated. There's a 1-for-1 correlation between those two things. So look, it is what it is. You have 3 choices at any given time in the market: buy, hold, or sell. I don't think it makes a lot of sense to sell at the local lows, and that's my humble opinion, not financial advice. I know we don't have a lot of dry powder to buy anything, so there's that challenge. Good for you if you have a real job, not in Web3. You probably do have some income. Maybe it makes sense to DCA. I know we got some DCAers on the stream right now. I'm gonna hold. I'm gonna wait for the green candles to come back and the retail to come back, and then I'll look to take profits. Then I know it's been a tough past 3 months, but really it hasn't been that long since we were at 126K, has it? Right? That was October. I know it feels like an eternity, but it was only 2-3 months ago.
And we got here some more ETF news. This one I'm not that bullish on, really. NASDAQ files with SEC to remove position limits on Ethereum ETF options. More money is coming. Options are well known to be the top indicator in 2017 because they weren't spot ETFs. They were leverage option plays, which means you got a lot of hedging going on, and it's really not great for assets that have finite supplies in which supply and demand curves can go up and to the right when you start throwing options on them. So I don't know how bullish I am on this one, but one that did come out in the same line of discussion is this one here. 21 shares Doge ETF T-Dog goes live on the NASDAQ 22 hours ago.
Oh, that's an interesting one. Yeah, I didn't know about that one. Looks like we got some. I want to give a shout out to the viewers here. Good to see everyone. Moonmutt, good morning. How are you, sir? Hope you're hanging in there, holding on for dear life, as they say. Good morning, Nonso. Always reminding folks to smash a like, share, and subscribe. Yeah, silver looks like how we want our altcoins to look, doesn't it? But that's not the reality we're living in presently. So just accept reality. It's a little easier, I think. Patience, young Padawan from our boy Dovkin, absolutely. Doldrums, yeah, that's the most used word in crypto right now, isn't it? And then seems like the market got thrashed 25 minutes ago. Yeah, let's look at the chart. We haven't looked at the charts yet. Like, what the hell's happening with the prices? I don't even know. I guess we're down.
Well, gold is up, which would make me believe Bitcoin is down. That's how we kind of started the whole conversation. 88,796, right at this uptrend line that we really want to hold. Of course, the lower low would mean that you go below these 86,300 levels. We don't really want to do that. But yeah, down a little bit, down about $400 per Bitcoin, sitting on that support zone. Ethereum down maybe $50 and sitting on the support zone if we go down here to this chart. So this one's actually falling below it, and you do not want to give up $2,780, and it's currently at $2,900. These are at critical levels if you want to keep the uptrend alive and keep putting in higher lows. For Ethereum, we bought back our position here at the previous low at $2,729. So we're still in the green, still doesn't matter, but I'll tell you what, it felt a lot better just a week ago, and we're at $3,400 ETH and above the moving averages.
It did feel better. My portfolio felt better. I looked at it. I felt so much more rich on paper. That was cool. Now I feel slightly poorer. That sucks. But if you're not selling, if you're not planning to sell, then, short-term price performance shouldn't really matter that much. Now, obviously, look, the trends and the charts do matter in as much that if you see certain levels, being given up, that could spur on more selling and you break down further. So, again, you don't want to see it. I don't know, is the regular stock market down presently? Did Trump announce he's invading another country? Or is Frank just, overreacting to a 0.5% move?
NASDAQ is flat for the day here. 25,519.
Okay. Not a lot to worry about, though.
This goes back to, if, history repeated itself and Bitcoin was tracking NASDAQ like it has historically, Bitcoin should be like 158,000, and we're at 88.
Well, maybe Tom Lee will be right. We got a week to go to hit 180.
Yeah, talking about this, Tom Lee says, I think Bitcoin hits 180K January 31st. That's crazy. We started talking about this to start the show. If it followed NASDAQ, you'd be at 158K, which I'm sure a lot of people would take, and we're sitting here at 88K. Do you think this is possible at all? I think this is not possible at all. But, shout out to Tom Lee, I guess, for making headlines with this. I mean, realistically, if we saw back into the 90s by the end of January, I would be thrilled because that would mean we would hold higher lows. We would keep the bullish formation going, and our upside target would still be like $110,000 roughly. So if we could just get back into the 90s, which is only like a $3,000 rally, I think there would be a big sigh of relief in the market, and the overall trend as far as momentum, fear, greed would flip very quickly as well. But 180,000 in the next 7 days, I don't think so.
Yeah, I think Frank said it best. He must be high. He's smoking something that I want, some really strong opium. I mean, I need to get my hands on that stuff. But in all seriousness, no, that of course is not happening. I think Tom Lee, look, he's done wonders for Ethereum. I'm so happy he's a spokesperson for this industry. He's onboarding so much Wall Street money into the space. So, good on him. I think he needs to get out of the business of short-term price predictions. Short-term price predictions will make anyone look like a fool. Let's be honest. Like, this shit's almost impossible to predict short-term.
Because really, you're only looking to be right 60% of the time. That's the thing. With short-term price predictions, you're just trying to be right more than you're wrong and keep your position sizing the same. So if you're right 60% of the time on price predictions for short-term, you're winning. That's why it's always going to make you look silly. You're going to be wrong 40% of the time. People are going to call you a clown, whatever. But if you're right 60% of the time, you're winning and you're getting people on the right side of the asset. But people are going to sling mud at you.
Yeah, no, that's a very great point. If you're trading, I think obviously you be right 60% of the time. You're great at your job, and that's good. But trading is different than going out on social media and doing a post every other day.
True.
And I just think, and usually these when you're trading, you're not like, oh, it's going to double up in a month. You're like, it's going to do like 5% in a day or whatever. You're going to be much more reasonable, price targets in a short period of time. So it's very different trading versus on socials. I mean, again, thrilled that he's a part of this industry, no doubt, and I'm very happy for that. But yeah, this is a little crazy. I just think the problem with doing these wild price targets over and over is you start to lose credibility. And I mean, he's not just some random fucking degen on X who's anonymous who can just spout off nonsense and it doesn't really matter. Like, we need him to have credibility because he's going out and he's trying to onboard millions and billions and trillions, from institutional finance types, and they need to believe in him. And he goes out there and spits nonsense every other day. That's not good.
Right.
So yeah, he should stop.
One thing he has done yesterday, they staked another $500 million worth of ETH. They have $5.7 billion worth of ETH staked, which is less than like 2% of the total supply, and they are targeting to hold 5% of the total supply. So shout out to him for that. They had the algorithm. They're just literally buying 100 million ETH a week and staking 500 million ETH a week until they run out of money and run out of ETH to stake.
Yeah, no, it's great. Like, thank you, Tom Lee. Dude, keep it up, man. But let's just calm down on these short-term price targets. If you want to do what we do, and you want to give long-term price targets, I think that's perfectly reasonable. Like, I'm out here talking about $1 million Bitcoin in 10 years.
9 years.
That's much more of a credible take and believable thing to say than 180 in, 7 days from now. So, if you want to go out there, Tom Lee, and say, in 10 years, ETH will be worth 50,000 in ETH. Yeah, you know what? That actually makes a lot of sense. Whatever it is, that's like less than 20 times. And we're still at a $2 trillion market cap then. It's like it's nothing.
Yeah, talking about Ethereum price, if Ethereum just reached 1/10 of gold's value before the run-up today, with gold at 4,700, if it reached 1/10 of the gold value, that's $28,000 ETH. So that's just another random number to throw at you, but that seems very plausible.
That's what I'm saying. But it's not going to happen in a week. It's going to happen in like 5 or 10 years. But the other reason why I think it's important to just really focus on your long-term price targets, you start to get into this game of, I'm going to get rich in a week. That's not the mindset you need in this space. That's how you get wrecked, because you're going to take way too much risk and you're going to get involved with leverage or, I don't know, just investing in, meme coins all day long. Have a long-term mindset. So talking about 10 years price prediction, I think that's really the way to go. It's what we, espouse here over at Crypto Paradise. So for all the 173 viewers, shout out to you guys. If you believe in our $1 million Bitcoin by 2035, give us a like, give us a follow. And we want to hear from you in the comments. Do you believe in $1 million Bitcoin in 10 years from now?
Frank says, imagine if that happens, I'll send him a Lambo myself, talking about Tom Lee's prediction. Now, here's a prediction based off historical evidence that kind of makes sense. And you guys let me know what you think. This is your daily dose of hopium. that the 4-year cycle is over. We're on a 5-year cycle, and we're actually going to repeat what happened in 2016 and 2017 here in 2026. So Bitcoin 2016, 2017 cycle, I was there. I lived through it, man. Was those the glory days, and were those the easier times? If I knew what I knew now back then, holy cow, I probably wouldn't be doing this live show. I'd probably own Epstein's Island and renaming it Hellman's Island and making sure to be more kosher with things going on over there, right? Maybe that would have never happened. But anyways, pumped about 25% from the election to Trump's inauguration, November 2016 to January 2017, roughly $720 to $900 per Bitcoin. This is when Trump won his first election. Very similar to what happened just a year ago. Dumped about 35% in Q1 2017, peaked near 1150, down to about 750 in January. It started rallying from April of 2017, which kickstarted a massive bull run from about $1,100 to nearly $19,000 by December of 2017. Now here we are, Bitcoin 2025 and 2026. It pumped about 60% from election to Trump's inauguration, outperforming the 25% it saw in 2016. November 2024 to January 2025, roughly $69,500 to $109,000. And then it dumped 30% in Q1 2026. Well, what do you know? It dumped 35% in Q1 2017. So far, from late 2015 high near $126,000 to current range at $89,000. Will start rallying from April to kickstart another massive bull run if history repeats itself. I guess history is about to repeat itself again. It is kind of ironic. Gains when he was elected, because the stock market also went up when he won his first election. Dumped 35% in Q1 2017, the year after election. We dumped 30% and really about 32% in Q1 2026 so far. Now, do we see the rallying starting in April? And when you look at April from this history perspective, it is kind of interesting because April would mean that, yes, by then you probably would have QE. You would have more interest rate cuts. You'd be speculating on a new Fed chair coming in May. And you would already have stimulus checks, tax refunds, and everything starting to hit people's mailbox in April as well.
Those are all the reasons why a pump should materialize by April. No doubt in my mind. It's not going to be because some arbitrary dates and things that happened previously, last Trump term. It happened in April then, it's going to happen in April now. No, it's going to happen in April now because of underlying reasons based on business cycle, liquidity, Fed policy, new Fed chair, ISM expansion, tax refunds, like you said. The one reason, though, I think we are absolutely in for a banger 2026 is Trump really needs the economy and the financial markets to be pumping and peaking and just crushing it leading into the November midterms. Otherwise, he's going to lose control of the House and maybe the Senate, probably just the House. And that's going to obviously ruin the remainder of his term. So he knows how important that is. They are going to pull out all the stops, man. And you already see it, right? You already see him doing so much. I think the problem is maybe he's doing a little bit too much. And it's kind of spooking some of the markets. Like, if every other day you have some massive announcement, like just last week we had the proposal of 10%, max interest on your credit cards. And then you have whatever's going on in Greenland and Venezuela. And you got fucking the thing that he had proposed with the housing. What is he going to do with the housing? Oh, Wall Street can't invest in houses anymore. I mean, all these things. In isolation, I think they're all great. But if you do too many too quickly, I think it kind of spooks a lot of people in the markets. So maybe that's the issue.
I would agree. It does definitely cause market uncertainty, but the stock market doesn't give a shit. Keeps going. It's the only market that's scaring right now is the crypto market, seemingly. Stock market's near all-time highs. Precious metals near all-time highs. Every indice near all-time highs. So I do agree with you that the markets don't like it. But when you zoom out on the stock markets, it really hasn't mattered.
But I think there's a world we could be living in where gold didn't run to 40 trillion and it stayed at maybe 30 trillion. Like it went up, but it didn't go like insane. And stock markets had done even better. So I mean, I don't know. I mean, this is like anything and anyone in your life, you take the good with the bad. So there's a lot that Trump's doing that I love and I like. Some of it I don't love and I don't like. And I think you got to call a spade a spade. So and the funny thing is too, like I actually think these policies are ultimately good for the economy. but maybe they're coming on too fast, too furious, a little bit too, quote, chaotic in the way that they're rolled out, and it's just spooking people. But maybe this take is all wrong. Maybe this has to all come back down to Japan. Apparently, the bond market in Japan is like imploding right now.
For a couple months now. Yeah, it's been that unwinding trade has been going on now for a couple months. So that's for sure. Hasn't really affected our assets. I guess big gold go up hurts us. But the other thing I do agree with you is I think he's going to keep digging in because not that Bitcoin and his pro-Bitcoin, pro-crypto stance got him all 73 million votes, but I would say it converted probably 10 to 12 million libertarians to vote for Trump due to his support of crypto versus Democrats wanting to kill crypto. And if crypto prices are higher, it's much easier, more likely to get that 8, 10, 12, 15 million to go out to midterm polls to reelect moderates and conservatives to preserve the uptrend in the regulatory compliance around crypto versus if crypto prices are down, we haven't had the Clarity Act, we haven't figured out the Bitcoin Strategic Reserve by then, maybe some of those libertarians at 10 million, 12 million, I don't know if they still would convert back to Democrats, but maybe they just don't go out to the polls and vote, and that's still a vote for a Democrat in that situation.
I have an idea. I think we should put it out there. Trump, if you're listening, I fully intend to vote for your party come November, but only if Bitcoin's above 100K, bro.
There you go.
Okay? We got to be above 100K by November. I mean, that's even like a bare minimum. We should really be like 125. Honestly, we should be at $125,000 Bitcoin by November. Otherwise, yeah, I ain't voting for you. See, the thing is, even that I know it is not true in my heart of hearts because you have to think about what the alternative offers, which is they're literally going to close down Coinbase, Binance, throw everyone in prison, hunt you down, confiscate your Bitcoin,
and then give it all
probably
away
throw
to,
you in prison
give
for
it all away to
talking about
foreign
this, that,
undocumented immigrants.
Yeah, I mean, I'm obviously being hyperbolic, but like the Dems want to kill it, and even if Trump didn't cause a massive pump despite his best efforts, it's still better than the alternative.
We talked about one of the news articles from yesterday that was wanting the removal of the limits on ETFs, and apparently just in, NASDAQ removes Bitcoin and Ethereum ETF options limits. So now you can gamble as much as you want on ETF options. Again, I don't really love this that much because it allows bigger hedging, which for a scarce digital asset, we just want people to hold spot, and that makes price go up. And once you throw in even more hedging and options, not to say assets won't go up and people won't bet on the long side, but they can protect themselves and take a lower risk in the markets. They could go long on the options and not hold any spot, which doesn't overall help price. So I don't know. Not a big fan of it. A bullish news piece regardless. Not a bad thing, but just not a great thing to really help spur price and momentum.
I mean, I'm by no means an expert on the implications of this, but my bull take is that when you enable further hedging and options tradings and derivatives tradings, you incentivize additional spot exposure, right? Because now whatever hedge fund or fund is getting involved in this kind of trading is going to say, well, I can, quote, protect myself, my spot position with these additional options, something along those lines. So it could theoretically, increase spot holdings. I don't know. But, I think, look, more kind of liberation and, more options, so to speak, in the market is ultimately a good thing. Not options in the sense of the financial instrument, but just different ways to get involved with the industry, right? I think ultimately long-term is a good thing, opening up the industry in a sense. But who knows? Maybe it's bad. I mean, my big theory now as to why we've underperformed for as long as we have, one of the reasons is just the amount of leverage trading and perpetuals and futures and everything that's going on, within the industry already. And the fact that these exchanges, they got easy targets now to manipulate price up or down to hunt the longs and shorts and make money that way. So, yeah, a lot of manipulation that's been going on. We need a Clarity Act, I think, is really what it comes down to. And maybe that's another reason why we're seeing some weakness right now. I'm seeing cold water from mainstream media, getting thrown on the Clarity Act, whether that's going to get passed. But who knows? Maybe it's also the Quantum FUD. We got some great comments here from the viewers. Did you guys hear about the Quantum FUD? It's so far away from you guys. Yeah, I saw Quantum FUD like 2, 3 weeks ago. It kind of rears its head every so often. I think it's a little bit silly, honestly, because first of all, Bitcoin can upgrade itself to prevent quantum threats if it chooses to, which obviously, the validators and so on would do this if it became a real threat. But the bigger point, I think, is if quantum can break Bitcoin, dude, it can crack every single one of our accounts, every brokerage account, everything would just get.
You have a 6-digit PIN number that's tied to a publicly facing debit card number. You think Quantum couldn't get that? Gone.
There you go. Exactly.
It's like, come on.
Like, for everyone to be like, oh, Quantum's going to destroy Bitcoin. Like, Quantum would destroy the global economy if, it got in the wrong hands and was as bad as everyone thought and we didn't adapt to it. But of course we're going to adapt to it. Of course we're going to build in safeguards and prevent it from happening. I also think that it's a much longer term thing. You always have this with new technology, right? Like, whenever there's a new exciting technology or some threat, everyone's like, it's going to happen tomorrow. Like, I see all these posts about AI. We're going to all lose our jobs tomorrow, bro. You guys don't know how quick it's going to happen. Yeah, some people will lose jobs, I'm sure, but there'll be new jobs created, and it's not going to happen tomorrow. So calm the F down. Same thing with the quantum. So if you're not investing in Bitcoin because of quantum FUD, I think that's the wrong move.
Yeah, and this got spurred on again, which I thought was anti-FUD. As Coinbase announced a new quantum computing advisory board. The board will publish position papers on the state of quantum computing, issue guidance to users, developers, and institutions, respond in real time to major quantum breakthroughs. So if anything, I thought this was anti-FUD. Like, now we got Coinbase putting billions of dollars in a research team to keep an eye on quantum computing, to update their security standards, and then to present that to governments around the world for security standards of not only Bitcoin, Ethereum, and crypto, but also security standards of the other broader banking system. So I thought this was anti-quantum fund. Like, this is the first time I'm seeing of somebody putting money into an actual research platform and program that they're going to utilize that research and give it out publicly and not keep it in-house, which is very rare for big companies to do as well.
There's way too much money on the line for the crypto industry, the financial industry. Every fucking industry has got to solve this quantum problem if it's actually a genuine threat coming in the near term. So they'll get it solved. I mean, assuming it can be. And if it can't be, then we're all fucked anyway, right? Like, if this thing can't be solved, then everything's going to zero and we're just going to be living in a hellscape. And I don't think that's going to happen.
Back to physical dollars and back on the silver standard, and silver's going to be.
There you go. Give us some gold, I guess, guys, right? We're going to go bartering for gold again. Who knows? But go down to Starbucks and buy your coffee with a sliver of gold. I don't know what it's going to look like. But in any event, I'm not worried about this. I think I saw one Wall Street guy like, I don't trust Bitcoin anymore because of quantum. But he's like some 65-year-old dude. I'm not sure I fully trust his take. So you guys can do some more research on quantum. But the big takeaway is if it breaks Bitcoin, it's going to break everything, and we're all F no matter what.
Yeah, UBS is not scared of quantum computing. That's for sure. $7 trillion under management, and now it's rolling out Bitcoin and crypto trading for its clients. I wonder what this is going to be. I'm assuming just Ethereum, but it'd be nice to see. Are they going to do Ethereum, Solana, and now Doge, since there's a Doge ETF that just launched as well? I don't know. But this is just another access point. Not to say 7 trillion is coming into the market cycle, but if you get 10% of that, you get $700 million of fresh capital into the markets for scarce digital assets. That can spur a lot of word of mouth, that can spur a lot of price pumps, and that can spur a lot of FOMO. So I think it's pretty safe to say a lot of financial advisors are recommending 1 to 5%. Some are even saying 10% of your portfolio into crypto as a hedge and based on historical trends. That would put you at $700 million of fresh capital that didn't have access before, maybe finding its way into Bitcoin and other crypto assets.
I think the problem with how regular retail is viewing the market right now is they're just extremely impatient. You see these news articles drop on a seemingly constant basis, right? We had JP Morgan, I think, just yesterday saying they're going to launch a fund on Ethereum. You have Bank of America announcing that they're recommending 1 to 5% allocation, from the wealthy clients or whatever. I'm sure I could go on and on about all the stories, Wall Street adopting crypto, blah, blah, blah. But that does not mean that the very next day, everyone who had an account at UBS decides to invest 5% of their account into Bitcoin the next day that it's available. Like, this is a long-term trend. This is a long-term trend. Look at the gold ETF price performance. That's, I think, a really good proxy for how I think this is all going to go. Because gold ETF, I think, was launched, I don't know, what, 15, 20 years ago? I don't know what it was, maybe 10 years ago. And it basically caused gold to go on a slow bull run for 10 years. A slow grind up for 10 years as more and more people slowly but surely dip their toes and allocate a little bit of money into the gold ETF. Why would you expect it to be any different for Bitcoin? So it's not going to be like, oh, UBS does this thing and a deluge of capital comes in the next day. It's a long-term trend you got to keep your eye on, but it's all positive. It's all good. And when you're looking at Bitcoin, $1.7 trillion asset, highly undervalued. Long term, we got only one way to go, which is up. So just everyone calm the F down.
Yeah, so gold ETF was launched in 2004. Gold prices initially surged about 200% upon that launch, and then they settled in. It went to new all-time highs in 2011, so 7 years later, really probably 5 years later, because it did go on a 200% run, which was another 250% gain. But over the period of 2004 to 2024, so 20 years, gold's total return is 543%, surpassing the S&P 500's 482%. And we know just as of this past year, gold really did have another double or triple up. But it went through a 10-year bull market and then had 10 years of stagnation with slowly grinding, outpacing the stock market, and now is finally breaking out of that and surging to the upside. So when these things become institutionalized, things in price performance becomes elongated. It's still up and to the right. It's still outperforming the stock market, but you're not having as much upside volatility on the 4-year cycle. Everything is elongated with traditional finance.
I think those numbers demonstrate what we spoke about a little earlier on the show, which is you have to understand how rotations work, right? There was a period of time when gold actually underperformed, right? Because money was flowing into the stock market. People were maybe more risk on. Yeah, I don't know what was happening exactly at those moments in time, but the stock market did better. Then gold did better. Then the stock market. Then crypto has its moment in the sun. Then, So I guess the lesson is understand rotations. Be diversified too, if you can. I mean, we talk about that on the show a lot. Be diversified because not everything pumps at once. Sometimes, hell, your real estate might be doing well. I mean, real estate did great for a while during COVID. I mean, I guess every asset did, to be fair. Bitcoin, crypto, they did well for a while. Now gold's turn. Stock market's going to be, probably next. Then we're going to have Bitcoin come back into the fray. So it's just, this is all how it goes. Just a cycle, just a rotation. Nothing to worry about, folks. Just stay patient.
Precious metals in 2021 were $12 trillion, and at the height of the last bull market, Bitcoin and crypto were $3 trillion, and we were all massively euphoric and so rich. 2026, precious metals have surged from $12 trillion to $40 trillion, doing a 3.5x over the course of 5 years. Meanwhile, Bitcoin and crypto still at the same $3 trillion here with Bitcoin at 88,000 and Ethereum at 2,800. And, no longer euphoria, no longer feeling rich, not fun, nobody's paying attention, even though we're at the same prices that made us euphoric back in 2021. But I guess this is just a thing that goes to the rotations you were talking about. You could have done a 3x in precious metals and been flat overall with crypto. But also this should tell you the decoupling or the price underperformance of crypto. And we think the technology has only gotten better. We think the opportunity has only gotten better. The accessibility, the regulatory framework, everything's only gotten better in those 5 years, yet the prices remain the same. That's why we think there is a massive undervalue here. And the prices remain the same because institutions have been accumulating, or retail has not been involved at all. So when retail comes back, we play that catch up. Maybe we finally hit that $10 trillion mark, and precious metals continue to float somewhere between $30 to $50 trillion.
Yeah, here's why. Bitcoin and crypto are so criminally undervalued. It would take just a mere $2 trillion, say, of the capital that's flowed into gold to move into Bitcoin for us to double in price. You add half $1 trillion and you get a double up on Ethereum while you're at it. I mean, this is not a lot of money relative to the total world of assets, of liquid assets that exist, of which there's apparently 250 trillion, probably more now it seems, with the run up on gold and the M2 money supply going up. So say 250 to 300 trillion worth of all liquid assets, and here's our tiny little asset class sitting at 3 trillion still total market cap. So man, we're so undervalued. We're very early. I know it's hard. I know it sucks when you're like, oh, other assets are doing well and mine aren't. That's no way to live, though. Don't no? Isn't envy one of the deadly sins or some shit? Don't live with envy, guys.
We got Dovahkiin in the house says, is RWA going on chain the biggest thing for crypto blockchain or privacy sector? I mean, RWA is a big thing because it encapsulates so much. RWA would encapsulate bringing stocks, options, all these things on chain, 24/7 markets, all running on Ethereum. RWA encapsulates businesses putting some kind of reward program on chain. RWA puts kind of like Yak DAO where you have physical property that can now be tokenized and fractionalized. Same thing with collectibles. So RWA is a vague term for a very broad sector of which anything that falls in that asset class is going on chain, going to create transactions, and you're going to create holding of Ethereum for most of them. But also there is one on Solana with Crypto Collect and some other things. So I would say RWA is going to be the easiest thing to onboard institutions and to onboard retail FOMO because they can put their head around it and have a reason to do it. Versus the privacy sector goes back to the old mantra that we saw in 2016, 2017, where we're trying to get privacy and freedoms from these tyrannical governments.
Yeah, I think RWA is more of an institutional play. It's a big trend, tokenizing stocks, for example, or tokenizing real estate. It hasn't really taken off as a narrative or sector for retail investors to do well, like in the same way that memes have taken off in the past, or, I don't know, prediction markets, perpetuals platforms. So I think like the big trend that we've seen in the past, I don't know, year or two in crypto is when it comes to retail, they're leaning heavily into the degen side of crypto, the gambling side of crypto, prediction markets, perps trading, leverage trading, memes, pump fund, whatever. That's what gets a lot of hype and excitement in retail and crypto. And then you have the institutions. Oh, it looks like our X went down. Apparently, that's a bummer. Maybe Martin's just not seeing it. But in any event, institutions are all leaning into RWA, and I think it's a big trend over there, and it's good for Ethereum too, by the way, because it's all happening on ETH. Guess we're no longer on.
Yeah, I'm looking at X. We only were live on X for 27 minutes and 48 seconds, and we've been live on YouTube for 47 minutes. So we lost half our show on X. That's unfortunate, but at least we were still here on YouTube, still on Facebook, and well, I don't know what that issue was, but X has been. I think it was earlier last week where X shut off halfway through as well, but I think that was a site-wide thing, not just a us thing. But anyways, you on YouTube, that means you got the alpha of the alpha. But we've missed 20 minutes on our...
That's a bummer. Show. That's a real bummer. Well, it's okay. We'll be back on Monday doing more fun banter for you guys. Hopefully the markets will be a little higher. Maybe, Nick, you can share your screen on the Crypto Paradise main page. And, everyone, I want to see you guys go over there and vote on the latest poll that Martin had put up. Do we get a pump or a dump this weekend? What say you, Nick?
Based on the over, I'm hoping for a pump. But, we're teetering on these all-important lines. So, that's why it's tough. Yeah, here's the weekend pump or dump. Scroll down on X, and there is a poll there. Give it a vote. 5 hours ago, weekend pump or dump. What do you think you want to do? Give it a vote. Give it a like. Give it a comment. Let us know your thoughts.
I voted pump because, I'm sick of dump. And I just think it's time. We've had this consolidation now for 60 days or so, maybe longer. And that's typically when you start to see a breakout happen. The last, 5 or 6 of these consolidations last about 60 days, and then there's another breakout. So hopefully, fingers crossed. I mean, good Lord. It doesn't take a lot, right? Like, Binance, Wintermute, etc., laying off the sell button for a whole weekend, and we'll run back up to 95,000.
Yeah, very possible. Really, if gold just falls from 49.50 down to 4,800, you're probably back into the 90s. So, go sell your gold and your silver spot, and hopefully it causes the price to drop if you've been hoarding those. Silver is knocking on the door of 100. Gold knocking on the door of 5,000. Ethereum and Bitcoin react like you think they would react, and they dropped today, sitting on the very important uptrend line, and we'll see what's happening. I mean, I got a lot of gold, but it's only in the form of jewelry, so I'm not really selling it. So I should be pretty happy because my chains are worth more, my rings are worth more. The Dubcat 10K ring we got is worth more, but you know, never fun because I know that those prices going up are hindering the prices of the assets I really want to go up, which is crypto.
Yeah, well, gotta wait, I guess, a little longer. At least you didn't lose your gold chain and rings and so on. I lost my one gold chain that I had bought. I can't find this thing. Somewhere in the house, maybe, I guess, or I don't know where I lost it. Who knows? Maybe it's in Mexico. But on the beach somewhere.
The first Crypto Paradise person that went down there to utilize your thing, like, oh, wow, a free vacation and a gold chain? Okay. Well, at least go sell that gold chain right now. He bought it for about $600. It's probably worth $1,200 now. Go sell it and then go put $1,200 in the surf down. We'll call it even, okay?
I could really use that $1,200. That's like a vacation down back to Mexico.
Right.
Fucking hell. All right, well, in any event, guys, sorry we dropped off on X. We'll wrap this one up for the day and for the week. We appreciate you guys jumping in. We'll see you on Monday. Until then, see you on the beach.